Good morning. You've tuned into a fresh edition of Buy Now, Sell Now right here on ET Now. I'm Karunya Rao. With me is Varun Hirmath, and let's start off the show by taking a look at how the markets are faring. Right now, you have both the benchmarks firmly in the green. Nifty is up about 0.5%, trading firmly above 13,500 levels. Sensex is up almost 190 points. Broader markets is where the action is today. Small cap index is gaining in the excess of 2%. You have the mid cap index also up about 1.5%. So solid gains coming in, especially from the broader spectrum. As far as the benchmark index is concerned and the top sectoral performers are concerned, you have all the sectors firmly in the green. Today's up move led by baskets like realty, media, IT, as well as Nifty Auto. All of them gaining more than 1% each. In fact, Nifty Bank is also looking fairly firm. It's up almost 190 points as we speak. Some names from the FMCG also witnessing a fair amount of action in trade. Wipro definitely is the top name to watch out for, up a solid 3.5%. They've talked about their buyback details, and of course they've won a very important deal. We'll get you the details of that through the course of the show. It's a potential $1 billion deal. That's the big headline here. You have a Bajaj Finance rising more than 2%. M&M is up 2.5%. Cipla is also gaining in the excess of 2%. On the flip side, you have just a handful of names in the red like Divi's Labs, HDFC Limited, ONGC, but the quantum of losses there is actually not too concerning, at least at this juncture. So yeah, broader markets, well, like I said, that's where the action is. Let me tell you some small cap names that are flying in trade. You have a Dish TV, South Indian Bank, Chalet Hotels, Colte Patil, Sequence Scientific, NCC, NBCC, Shoppers Stop, Greaves Cotton, Ircon, IFB Industries, JNK Bank, India Bulls Real Estate. These are essentially the small cap names which are buzzing away in trade, and we'll look into it in detail with our market guests as well. But let's pull up the BNSN stock cloud. Varun, would you like to take us through that?
Yeah, sure, Karunya. Thanks for tossing. So we have a couple IT stocks today in the cloud, of course. Wipro and Infosys leading the cloud because they've had some major deal wins. So Wipro's had a $700 million deal win from Metro AG, and then Infosys has had a $1 billion deal win from Daimler Germany. So two German firms awarding big contracts to two Indian IT firms. We also have Zensar Tech, which has been selected by NFU Mutual as a strategic tech and digital services partner. So they're in the cloud today as well. We have Westlife Development, Motilal coming with a neutral stance, but a 440 rupee target on that stock. We have Jindal Stainless Hisar, which has ICICI Direct initiating coverage a couple days ago, and it seems that that company's on the turnaround as well. We have Fine Organics not featuring in the cloud today for the best of reasons. They recently had a plant shut down by the MPCB due to some regulatory concerns, so we'll be bringing you more updates on that. Of course, AstraZeneca needs no introduction. The vaccine rollout should be here fairly soon based on all the authorities. And for India, the AstraZeneca vaccine is probably the one that's going to be the most important. We then have BEL, Kalpatru Power also in there today. And then we have a PVR on the back of some fundraising initiatives and a lot of re-entering of institutional buyers in PVR as well. That's got that counter in focus. But I think it's now time to talk technicals and fundamentals with our guests. Kunal Botra and Gaurang Shah should both be ready and with us. So good morning, gentlemen, and thanks for taking out the time. As always, great having you here this morning. Kunal, coming to you first. It's a sea of green today, you know, back to what we were so used to. And I feel the last couple of days were a bit of a rude shock for us. We weren't used to the market losing. But today, anywhere you look, bank index, auto index, mid-cap index, IT index, very little you can find wrong, right? And the breadth is really in favor. So given that the bull market seems to be in control today, what calls would you give to our viewers?
So good morning, Varun. Yes, rightly put. The sea of green is back again for the index, and let's hope that it tends to persist, for some more time. There are a lot of parameters, and I think the rationales why the markets have sort of bounced back. It is more to the oversold territories. After such a sharp correction, the indicators have a natural tendency to get back into oversold territories. We bounced back, after breaking or having a touch and go movement towards the 29,000 mark on the bank Nifty. So there was just a brief moment yesterday where the index formed a low below that. In technical terms, there is also one of the indicators which holds a lot of prominence for short-term bottoms at least, and that is bullish RSI divergence. Now, that was also spotted on the Bank Nifty, where the indices or the prices, they tend to make a fresh low on a relative basis, but the indicators apparently, they tend to make a higher low. So that's generally signaling an inherent strength which comes across in every stock, in every dip towards that particular asset class. So we saw that happening for Bank Nifty as well. So I think on revival rally. Now the important point to note out for a short-term trader is to try and watch the FNOQs for the expiry series. I think that will give a bigger indication of the trend going forward, because generally after such a shock which came by a couple of days back for the markets, there is always a tendency to try and not carry forward too much of risky positions, and there is a risk off which generally happens on a moderate basis into this name. So if that's the trend for the index, then I believe that the next couple of days could be a bit choppy. But I think the bigger indication of trend could lay forward on how the FNO positions gets rolled over. Now, two buy calls which I would want to suggest. And expecting that the short-term market trend would continue to go through a minor revival phase. First one is the one Bank of Baroda. I think it's a very interesting chart. Many of the PSU stocks we've been discussing on the banking side, had done exceedingly well. Bank of Baroda had corrected from I think 67 or 68 levels to now sub 60. The stock has come back to some major moving average supports as well. There has been a bullish crossover for Bank of Baroda on the weekly charts, and that was last seen, I think, almost 2 years back for the stock price. So this could probably be an indication that this could be a start of a weekly uptrend for Bank of Baroda. So suggesting a buy, targets to be kept at approximately 66 and stop loss at 57. We'll term this as a high risk trade. And the second is a low risk trade. It's a Bajaj Auto. I think it's a very interesting chart. Short-term breakouts about the 3,200 mark, medium-term breakouts for the stock price. Happened I think a couple of weeks back when the stock had broken almost a 4 month of a sideways price action. So I think this could be another interesting play on Bajaj Auto. Targets to be kept at 3,400. So expecting another 100 to 125 rupees on the upside from current levels, and stop loss could be kept at 3,240.
Okay, Kunal, thanks for that. Gaurang, hi, morning. In light of how the market's faring and the way it has shown resilience over the last 2 days, making a solid comeback, which are some stocks that one can sort of pick up at this juncture for a long haul?
Thank you, Karanya, and morning to all of you also. Firstly, I think at the levels where we were when we saw the peak on Sensex very recently and NIFTY, it's prudent to expect point-wise larger correction whenever, and not to forget, for the last month and a half, almost every day or every second day we were making a new high. And whenever markets react at such elevated level, point wise the correction might look a little bit larger, but if you have to look at in terms of percentage, then that may look a little bit more acceptable. Though I do agree that we overreacted when we compare ourselves to European markets or Asian markets or US markets. And this has always been the case, Karanya. We always tend to overreact whenever we have such news flows. And given the levels on the Sensex and NIFTY, it's prudent to expect volatility. Monday was a larger correction. Yesterday was choppy and volatile. And our sense is that given a truncated week, we have Friday holiday thanks to Christmas, and next week again it will be choppy because 31st December, which is the last day of 2020, is going to be the expiry day. Correct me if I'm wrong. So this week and next week you may see choppiness and volatility, but all dips should be used as buying opportunity. And with that perspective, first investment idea, low risk long term investment idea. The first one is from the cement pack, Ambuja Cement, with a target of conservative target, if you can say that, 280. And if the numbers are good enough on the second and the third and the fourth quarter, then we will revise these targets upward. And the second one is from the cellular service pack, the second largest operator, Bharti Airtel. Given the stiff competition and now with the expectation of ARPUs getting revised upwards and moving higher, and that is what exactly most of the comments what we've heard from the respective company management has been telling us. We expect the the market share to improve and revenues to improve thanks to ARPUs moving up. Targeting on Bharti Airtel close to about 710. And like I mentioned, Karanya, these are long-term fundamental investment ideas, low risk.
All right, request both of you to stay on with us. We're taking a break here, but when we come back, we'll address our viewer queries and get you more insights on the market. Stay tuned.
Hi, welcome back. You're tuned in to Buy Now, Sell Now on ET Now. Let's get on to the queries section of our show. And you know, it's becoming more and more apparent that the building materials theme and the home improvement theme is definitely one to stay. So we've had so many queries about these stocks coming in, whether they be Kajaria, whether they be the plywood stocks, some metal companies. Now we have again today Cera Sanitary Ware. Aditya Prasad from Mumbai has written to us and he'd like to know if it's a good investment at current prices. So Kunal, coming to you first, I mean, the mortgage theme continues. People are going to be buying homes, it seems. Realty stocks are showing a pickup. So obviously there's going to be a lot of bathrooms that need work. And Cera is a reputed brand here in India. So, but technically speaking, how is that chart looking to you?
Well, it's an average kind of a chart. Varun, the only concern with such kind of names is the low liquidity or the drop in volumes which these stocks they inherently face, and I think that's one of the reasons why even though the stock looks good on charts, it's done pretty well in the last 6-7 months from risen by almost more than 50%, 55% to be precise. I think so. In that regards, chart patterns have been quite okay, but the only concern is the volume front. So with low volumes, it's possible the stock may the gyrations of the stock and the movement of the stock becomes extreme. It could become extreme at one point of time. So that's the only catch. But I think if the viewer is looking to buy the stock, I would suggest that maybe if the stock comes back to a 200-day moving average, say somewhere closer to 3,000 odd levels, that could be a good level for you to enter into the stock, because it could probably cover up the mean reversion process as well at those kind of levels.
Okay. Gaurang, what about you? Your view on Cera? Of course, given that home improvement space is making a very strong comeback with the opening up of businesses, economies, consumption, real estate, etc. But specifically for Cera, how are things as is, and what would be your advice and your call on this one within the entire home improvement space?
So, Karanya, first of all, I do concur with views that Varun mentioned, that these sectors are looking more positive now with the recovery that we've seen in the real estate sector. But we also have to remember that they are directly or indirectly dependent on real estate sector. While I do not deny that with the policy changes and discipline coming into the real estate sector, these dependent sectors or companies are also likely to do well. But they also throw a lot of volatility at you, and if you are a risk averse, and if you really don't want to venture into that high beta volatile sector or companies, then our view is that you should possibly, if you not bought these stocks, then and if you're willing to make an investment, then primarily you should look at private banks, and over there I think Axis Bank would be a preferred choice. I do agree that these dependent sectors would also recover with the real estate sector recovery, but it will come in with a lot of volatility. So preferably private sector bank should be identified as long-term investment idea, and Axis Bank would be the one that I would advise.
Okay, all right. That's the verdict coming in there. Then moving on to query number 2, Arjun Dutt writes to us from Delhi. He wants the expert's view on Apollo Tricoats. It's been performing well since March. He's bought 200 shares at a price point of 300 rupees a piece. It has already become 2.5x. He wants to understand whether it's something that he should hold on to, or he should book the fabulous profits that he's already made in a matter of few months. Kunal, over to you for Apollo Tricoats.
from I think Feb lows of 250 to 60 approximately. It's now at almost 750 plus levels, looking quite strong. It's almost been a straight uptick for upper trichots. I think if I'm not wrong, almost 8 or 9 successive months of price uptick. So yes, it's done pretty well for itself. But you always have to remember that whenever these are the kind of stocks which generally tend to thrive and go through a strong spiraling kind of performance when the mid cap end of the market is buzzing, and that generally happens when the sentiment is buoyant. So assuming if the market goes into some sort of a consolidation, what we saw a couple of days back, if that volatility continues, then it's possible you may see many of these stocks going through a stronger round of profit booking. So I think it could be prudent enough that you take out some profits over here, maybe a 50% profit or a 70% profit odd, at current levels, and then try and relook at these kind of investments if these stocks come back to a corrective phase. So I would suggest that you book out at least partial profits from this particular stock.
So Kunal's of the view that it's time to take some money off the table. Gaurang, what do you think about an Apollo Trico? It's worth staying invested, or should you look for something perhaps a little safer like Kunal was just suggesting?
So Varun, greed is something that drives you down in the equity market. And purely looking at the levels of investment of this investor, I would request Mr. Dutt that though we don't have any specific coverage on Apollo Tricots, take money off the table. And like Kunal mentioned, I think these stocks go through tremendous volatility. Take money off the table if you're not hungry for more and if you're greedy. And alternate investment sector would be IT, and over there, a mid-cap IT stock, Mindtree, would be a preferred stock, but not at current levels, on correction.
Great. So both our experts are of the view that for an Apollo Trico, it's definitely time to book some profit. Let's move on then. Query 3 has a different sector in focus, the hotel and hospitality sector. We have Arjun Melwani of Mumbai who's written to us. And according to him, he's looking at Lemon Tree. It looks like a good pick, but it's been a laggard in the hotel pack. If you look at the way an Indian hotels has recovered and performed, Lemon Tree hasn't really done as well. Of course, in the recent 1 month, it's rallied to 48, then cooled off again, and today again, I think it's up around 4-5%. So Kunal, if you look at the volatility on this chart, it's a bit scary, but what would your advice be? Lemon Tree still looks interesting?
Well, it looks quite okay on charts, Varun, but the only catch over here is that after a 8-month, 9-month kind of an uptrend for the markets, the stock has been unable to recover. Even the Feb kind of the prices what was in Feb. So the Feb sell-off which the stock had seen, it's not been able to recover post that. The bigger concern with the chart price, at least the chart patterns for Lemon Tree, is the inconsistency of volumes. Now there was this period, I think in November end and December start, where the stock had seen a big price uptick from 30 rupees odd to almost in touching distance of 50 odd rupees. But that happened with strong spread of volumes. Now suddenly the volumes have just gone missing, and you've seen the stock correcting from 50 to a level of 35-36. So it generally indicates that it's a shallow stock in terms of volumes, very inconsistent. And when you have inconsistent, you have kind of volumes, you have to be ready for big price swings into stocks like Lemon Tree. So I would suggest that if you're looking to buy from the hotel space, why not look at Indian hotels? It's a far more stable stock. The volumes are quite consistent. The trends are quite strong on the long-term patterns as well. So the hotel space looks attractive, but I would suggest that you look at Indian hotels as a much better play as compared to Lemon Tree.
Gaurang, do you concur with Kunal? Because yes, while the hotel space is opening up and looks like there is good potential for great returns there, would a Lemon Tree be a good idea to invest in at the current juncture, or would you also lean towards something like an IHCL?
So Karanya, just undervaluation should not be the reason why you should be looking at a stock. Fundamentally speaking, you should have positive fundamental triggers to support undervaluation, which reflects that the good earnings would reflect upon the valuations becoming at par and then a little bit higher. And secondly, Karanya, aviation and hospitality sector are extremely vulnerable to any kind of news flow that comes in globally or locally. thirdly, the various restrictions that are put down by the center and more so at state level. For example, in Mumbai from yesterday, we have curfew at night from 11 p.m. to about 6 a.m. in the morning, correct me if I'm wrong. And thanks to that, I think a lot of cancellation has also taken place. So these two, aviation and hospitality sector, are a little bit vulnerable. And given the kind of situation that we are into, my advice would be that don't do anything that will attract a tremendous amount of risk on your investments. And with that view, my advice would be to look at FMCG sector, and over there, Tata Consumer, HUL and Godrej Consumer Products Limited. You can pick either of these three companies from a long-term point of view.
Okay, well, that's the verdict on Lemon Tree. Let's address query number 4 from Rakesh Garg of New Delhi. He wants to know if he should buy Wipro at the current market price. He wants to be invested over the next 9 to 12 months. He wants our experts' view on that. Kunal, you've been very optimistic about Wipro for quite some time now. So would you want to add something interesting that you may have spotted in the trend?
So, yeah, I think I've been very bullish on Wipro and I continue to maintain that stance. I think the stock is restarting a sort of a long forgotten uptrend for itself. It has been a big underperformer, as compared to large cap stocks like TCS and Infosys. Wherever we used to discuss earlier, a couple of quarters back, or at least a year back, we used to talk of just TCS, Infosys, and the discussion used to get limited to these large cap names because of the relative underperformance of Wipro. But the comeback in which the stock has done in this the post March recovery, I think has just been phenomenal. There's been a completely different set of volume triggers for Wipro as well, which means the buyers, and I'm sensing it's more towards the institutional buying. I think that's already happened at much lower levels for the stock price. I maintain my bullish stance on Wipro, and I would expect that the stock could soon cross even the 400-420 range as well over the near term. So if you've already bought Wipro, I would suggest that you should hold. If you are looking to buy, then I believe that these levels, as well as any kind of time-wise or price-wise correction, should be a good level for you to enter the stock.
Okay, thanks for that, Kunal. Let's get a move on. The next query is on HDFC Life, of course, a leader in the insurance pack. Latika Chauhan of Chandigarh would like to know if it's a good entry point right now, or if perhaps she can look at some downside before she enters. So what would your advice be, Kunal?
So again, for HDFC Life also, I think it's a very similar kind of advice. I think you should hold on to your investments if you're looking to buy. I think these would be good levels for you to buy. When you talk to the insurance space, even though the chart history is a bit limited for me to try and project extremely long term, but the way in which HDFC Life has managed to move up higher from the March close, the strength in which the stock has done, the leadership quality in which the stock had portrayed as compared to many of its peers, all of that indicates that if someone is bullish on the insurance space, then HDFC Life has to be amongst the topmost candidates in that particular category. So I maintain my bullish stance on HDFC Life as well. And I think if it's purely from a longer term view, I would suggest a buy, and especially use corrections. I think 600 approximately has been a very good pivot range for HDFC Life. It has a tendency of coming back to that support level every now and then whenever there is a correction in the market. So if assuming this correction in the market shapes up to one more level of downside, and if HDFC Life comes back at 600 level, I think it's a good level for you to enter.
Great. Gaurang, you'll have to forgive me for skipping you on Wipro, so please do share your view on Wipro as well, and then obviously we'd like your take on HDFC Life.
Well, Varun, so Wipro is not only a relative underperformer to the large cap, but also some of the mid cap IT names. If you're not invested, my request would be, or my advice would be, that look at HCL Tech or Tech Mahindra. These two names have much more larger potential of delivering higher returns compared to Wipro from a long-term point of view. And on HDFC Life, well, Varun, this was one of the pick during the Muhurat trading in the month of November, which was given out by our company Geojit Financials from a long-term point of view. And this stock remains to be a favorite top pick amongst the life insurance space. So if you really want to buy it, I think, again, my advice is that these are choppy times. don't go and put out all your money at one time. Start with maybe 25-30% at current levels, and whenever you get corrections in the market, you should go ahead and add another 25-30% in parts.
Gaurang, what about HDFC Life? Are you as bullish as Kunal was?
So HDFC Life happens to be the topic, Karanya, and like I was just mentioning, this was the Murat trading break from a long-term point of view during this somewhat trading in the month of November. As I will rate all the three names, HDFC Life would be at number 1, followed by ICICI Pru Life, and then third would be SBI Life. We are extremely positive on all the three life insurance companies.
All right, then let's move on to our next query and the final one for the day. Mohit Gupta from Mumbai writes to us. He's bought ICICI Bank at 400 rupees levels, and he wants to know whether he should book his profits or stay invested. I think his gains right now are in high single digits, but Kunal, going forward, do you expect any kind of dips or corrections, perhaps something that you foresee where he can add up to ICICI Bank, or should he book or exit and perhaps re-enter at a lower price point?
So I think first of all, I think it's great to see that the viewer has held on to this quality banking name from 400 levels. There's always a tendency and an urge to try and book out 5%, 10% profits into large cap quality names. But I think it's good to see that the viewer has held on to the stock even from 400 levels and the stock climbing up to 500 plus. Now that you've said the first thing right, I would expect that this stock should try and channel back into I would say a long-term trend which it started I think 2017 2018 for itself. So I would be of the belief that ICICI Bank has probably potential to scale up to not just its previous lifetime high, but going into a very strong long-term uptrend as well. And since you bought at 400 levels, you already have a lot of buffer and cushion. So I don't sense that you should go towards that short-term trading and trying to catch those 5%, 2% kind of moves. I think for a stock like, especially for a stock like ICICI Bank, so my advice would be that hold on to your investments over here and try and take any kind of significant dips into the stock price or into the market as good level where you can try and average out further.
Okay, so Kunal's quite positive on an ICICI Bank. Gaurang, how about you? I was mentioning this earlier as well. Of course, it's a leading private, but then such a high mortgage share in the loan book of ICICI Bank. So shouldn't they also be a big beneficiary on that front?
It would be, and booking profits is solely the discretion of the investor with respect to his or her time horizon and risk appetite. Now, if you're not in a hurry, if you are willing to hold on to your investment, I would not be surprised to see from a long-term point of view, Varun, ICICI trading at 580, 600 plus, and whatever we've seen in terms of earnings for this financial year in the first and the second quarter, our sense at Geojit is that private sector banks are likely to report stronger Q3 and Q4 and even stronger next financial year. So if you have time by your side and a little bit of risk appetite, hold on to ICICI.
Okay, thanks so much for that. On that note, we're done with the queries for today. So thank you to you both, Kunal and Gaurang, for giving us your perspective. On that note, we'll slip into a quick break here on Buy Now, Sell Now. Stay tuned. We'll be back in just a minute.
Welcome back. You're still watching Buy Now, Sell Now on ET Now. And before we proceed further in the show, we just want to flag off a quick reminder. Leaders of Tomorrow has launched their newest edition of the 9th season with the theme Empowering a Billion Dreams. Over the course of the last 8 years, Leaders of Tomorrow has inspired and enabled the drive for entrepreneurship nationwide and provided small businesses with the right mentoring from the biggest voices of the industry. Here's a sneak peek at what's lined up for you in terms of big interviews. Catch Leaders of Tomorrow Season 9 right here on ET Now at 10:30 p.m. gears then and talk about some key developments. India has lost cane arbitration matter at the International Court of Justice at The Hague. Ruchi joins us to tell us all that we need to know about this. Ruchi?
It's a big blow coming in, Karunya, after Vodafone. India has lost the tax dispute with Clean Energy at the International Court of Justice at The Hague. We're given to understand this verdict came late last night, and India will have to give around 8,000 crore rupees in terms of damages as an award that has been granted to Clean Energy by the International Court of Justice. In fact, the ICJ maintains that the cane tax issue is not a tax dispute in itself. It's a tax investment related dispute, and which is why it falls under the purview of International Court of Justice. In fact, the ICJ has also said that the cane taxation issue is a breach of the fair and equitable treatment under the BIPA. So, of course, a big hit coming in for the Modi government. Remember, the Modi government up until now has been saying that they don't stand for retrospective taxation, they don't stand for tax terrorism. Yet the tax department has been pursuing their tax demands at various levels, whether it was Vodafone or whether it was cane. And now it's, as I said, a big blow coming in. We're given to understand the Indian government will be given some time in this matter to now appeal against the International Court of Justice's arbitral award. Having said that, I'm also given to understand, remember in the Vodafone case as well, the Indian government up until now has not made up its mind whether they're going to challenge the appeal against the IC. So clearly now the government has key cases, one on Vodafone and the other one on Clean Energy. As I said, it's a big hit coming in for the Indian government. They up until now have maintained that India is a tax-friendly destination. India is an investment-friendly destination. Clearly, the way the tax department is moving is absolutely opposite to what the government has been saying so far. So clearly now the government will have to walk the talk, will have to maintain and define what their stance is in this matter as well.
Thanks for that, Ruchi. Thanks for joining in with that very important update. Let's switch gears, however, to the IT sector, which has just been in focus repeatedly every day for one reason or another. SEBI has given approval to the IT major Wipro, which is planning to return around 9,500 crore to shareholders via a buyback program. Poonam now joins in with the details.
But Wipro stock is in focus today on account of two important announcements. First is in terms of the buyback, and the second is in terms of the big deal that they have announced. In terms of the buyback offer period opens on 29th of December 2020, ends 11th of January 2021. It's a buyback worth 9,500 crore for a buyback price of rupees 400 per share, which they had announced during the Q2 results. At that point in time itself, the promoter and the promoter group had indicated their intention to participate in the proposed buyback. The previous two buybacks were worth 10,500 crore in FY20 and 11,000 crore in FY18. Besides that, Wipro is also in focus on account of a major deal with Metro AG, which is the German wholesaler. It's a 5-year deal extended for more than 4 years. The estimated deal value for the duration of the first 5 years is nearly around $700 million. With the potential to go ahead and increase to nearly around $1 billion over 4 years. 1,300 employees across Germany, Romania and India would be transferred to Wipro. In fact, we're seeing a lot of deal announcements coming in for the entire sector, and this deal in fact is one of the major under the new CEO. So yes, watch out for Wipro. In fact, Macquarie maintains an outperform with a target price of 416 per share, and they stated that it's a large deal for Wipro and they're building in 8 to 10.2% US dollar revenue growth over FY22 and 23.
Okay, Poonam, thanks much for that. Wipro definitely is the biggest gainer in trade on back of multiple positive developments. The stock is up 4.5% at this juncture. Slipping into a break here, more updates on the other side. Stay tuned. Welcome back. You're still watching Buy Now, Sell Now. It's time to unveil our quiz answer. We asked you this morning which IT major reported the highest EBIT margin in the previous fiscal. The options were Infosys, TCL, HCL Technologies and Wipro. The correct answer to the quiz question is option B, TCS. The winners for today's, or rather the champions for today's quiz are Nastik Brahmachari, Uday and Jagdish. Congratulations you guys for getting it right, and for everyone else, thank you so much for participating in the quiz.
Right, as we wind down the show, here's some top stories from the world of startups. Listen in.
News and content aggregator Daily Hunt's parent company Verse has raised $100 million from Google, Microsoft, Falcon Edge's Alpha Wave Incubation. This is all for the short video format Josh. And with this, it's become a unicorn. It is India's first unicorn which is into regional languages. Google and Peter Thiel's Mithril Capital have invested $145 million in InMobi's mobile content platform, Glance. InMobi is India's first unicorn in this space. It's pretty clear from Google's two investments today, content is king. Facebook and Google have agreed to cooperate and assist each other in case of an investigation for a lawsuit filed against both of them. As per a report by the journal, that's the Wall Street Journal, an uncensored version of a lawsuit was filed by 10 states against Google last week, accusing it of working with Facebook in an alleged collusion to boost its dominant online advertising business. The lawsuit says Google and Facebook were aware that the agreement could trigger antitrust investigations. Twitter's announced it is rolling out new features for the developer community. This addition to the expanded collection of the API v2 endpoints will allow app developers to better support Twitter's conversation controls. The feature will allow users to specify who can reply to their tweets. The API was rebuilt for the first time since 2012 with the aim of including features that had been missing from the earlier version, like polls and spam filtering.
We're going to wrap it up on Buy Now, Sell Now. Many thanks for tuning in.